When we add up all this, I get a total of 1,17,500. So on that, if you calculate 3%, it will be 3,525 rupees. So what is the value of asset realized? 2,20,000. So 4% on 2,20,000 is 8,800. When I add all this, including the notional calls, I get a total of 1,11,910 rupees. Hello everyone, I'm Purnima, faculty in the Department of Commerce and Management, Vidhyaashram First Grade College Temple of Excellence, MYSURU. I welcome you all to this session. In this session 3 of Unit 4, we will be working out some more problems on Liquidator's final statement of account. Now let us see what the problem holds for us. So the following is the balance sheet of Good Luck Limited as on March 31st, 2016. So on the liability side, we have the share capital, 20,000 shares of rupees 10 each, 2 lakhs. Bank overdraft unsecured, 1,100. Partly secured creditors, 29,180. Salary for 6 months, 6,300. Taxes due to government is 800. Trade creditors, 97,600. Total, 3,34,980. On the asset side, we have the goodwill, 30,000, buildings 25,000, machinery 37,400, stock 58,000, debtors 46,000, cash 500, profit and loss account 1,38,080 and the total 3,34,980 rupees. Now, we have the additional information here. So, the company went into voluntary liquidation and the assets realized as follows. The building which was used in the first instance to pay partly secured creditors pro rata 18,000. So, the value of the buildings which was secured by the creditors, so that is 18,000, machinery 31,000, stock 25,000, debtors 43,500. So this is the value realized or the assets when they are sold. So when the assets were sold, so what is the cash which the company has received by the sale of these assets? So that is what they have mentioned here. Then expenses of liquidation amounted to 1,100. The liquidator's remuneration was agreed at 3% on the amount realized except cash. So this we should make a note of. On all the assets realized only, we have to calculate 3%. But sometimes if they don't mention except cash, we can include cash and then calculate the liquidator's remuneration. And 2% on amount paid to unsecured creditors. So whatever is the amount paid to unsecured creditors, you have 2% on that. So other than preferential. So if they tell that only on unsecured creditors, then you can calculate only on unsecured creditors. So, but if they don't mention other than preferential creditors, then you have to include preferential creditors when you are calculating the 2% commission for the liquidator. Prepare liquidator's final statement of account. So, in this, we will first calculate who are the preferential creditors and who are the unsecured creditors. Okay. So, we have the bank overdraft here. So, the bank overdraft is always an unsecured creditor. So, it comes under unsecured. Then, we have the partly secured creditors. Out of 29,180, 18,000 is secured. So, the rest of the 11,180, it becomes an unsecured creditor. Then, salary is for 6 months salary they have given. 6 months, it is 6,300. So, for salary for 6 months is 6,300. Out of this, only the salary for 4 months will be considered as preferential. The rest of the 2 months salary it is unsecured. So, we have to calculate the salary per month. So, for 6 months, it is 6,300. For 1 month, how much? 6,300 divided by 6. So, it will be 6 ones are 6, 6 zeros are 6 fives are so. So 1050. The salary for 1 month is 1050. So salary for 4 months into 4. 4 zeros are 0. 4 fives are 22. 4 ones are 4. So salary for 4 months is 4,200 and salary for 2 months will be half of that, that is 2,100. Then taxes due to government. So it is mentioned in the balance sheet that 800 rupees is due to the government. Then trade creditors. So trade creditors, whenever there is a trade creditor, it means that they are unsecured creditors. So you can safely put it in the unsecured creditors column. Next line we have the total. So the total of preferential creditors comes up to 5,000 and the total of unsecured creditors comes up to 1,11,980 rupees. Then next we will calculate the liquidators remuneration. So first, this is the 3% on assets realized. So it is given in the problem that asset realized. On the asset realized, it is 3%. So we will add. They have given us the various assets realized. The value of various assets realized is already given. So when we add up all this, I get a total of 1,17,500. So on that, if you calculate 3%, it will be 3,525 rupees. So this is the liquidators remuneration, that is 3% on asset realized. Then 2% on amount paid to unsecured creditors. So before we just calculate this, we will just write down the pro forma and then we'll come to this adjustment here. So we will write the pro forma. What is the pro forma? We'll write liquidators final statement of account. So whatever is the cash balance given in the balance sheet, the same balance you will write it in the liquidators statement. Then asset realized. If you can see here the balance sheet given. So this is the asset realized. The same thing we will be writing in the liquidators statement. So buildings 18,000, machinery, stock, debtors. So the total asset realized is 1,17,500. Then surplus from secured creditors, it is nil. Then contributories also it is nil. Then coming to the payment side, so we have the secured creditors. So since the buildings are partly secured, so I have written the secured creditors. But if I don't write buildings, I should not write the secured creditors amount on the credit side here. Then legal charges is nil. Liquidators remuneration, that is 3% on 1,17,500. So that comes up to 3,525. So this is the amount paid to unsecured creditors. So first thing is we have to calculate what is the amount paid here. So liquidation expenses is 1,100, preferential creditors 5,000 and unsecured creditors. So on unsecured creditors, what is the amount available that we have to think of? So what we will do is we will add all these payments. So that is 18,000 plus 3,000. So we'll add 18,000 plus 3,525 plus 1,100 plus 5,000. So from that we will deduct. So from 1,18,000 we will deduct all this. So from 1,18,000 minus 18,000. So add this 18,000, 3,525. So this value we have to calculate. I'll come to that. So you just leave it. Then 1,100 plus 5,000. So when you add all this and subtract it from 1,18,000, you will get one amount. So when you are adding all this, so you will get 27,625. So the balance is whatever you are paying to the unsecured creditors. So the rest of the money, 90,375, that will be inclusive of the liquidator's remuneration. So 90,375 into 2 by 102. So whenever it is inclusive of the remuneration, you have to add it to the percentage. So 2 by 102. So it comes up to 1,772. It is assumed that secured assets are realized by the liquidator. So we are assuming that the secured assets is also realized by the liquidator. So we have included the value of buildings for calculation of liquidator's remuneration. So I hope you have understood how you got this 1,772. See here, 1,18,000 minus, you deduct all the expenses whatever you have paid. So 18,000 plus 3,575 plus 1,100 plus 5,000. So that comes up to 27,625. So from 1,18,000 you deduct 27,625, you get 90,375 into 2 by 102. It is 1,772 only. So after that, what I do is, from this 90,375, I deduct 1,772. So this is the liquidator's remuneration. So 5 minus 2, 3. 7 minus 7, 0. So this will be 13. So 6. So 9 minus 1, 8. 88,603. So 88,603, that is the unsecured creditors value. So that is the exact payment you are making to the unsecured creditors. Now, if you calculate a 2% on 88,603, you should get 1,772. Then, in addition to that, you have to also calculate what is the exact amount you are paying to the unsecured creditor. So, you had to pay 1,11,980, but you are paying only 88,603. So, that means only 79.12% of this unsecured creditors you have paid. So, the rest of the money is bad. It has become a bad debt. So, I'll write here. So, out for 1,11,980, the payment made is 88,603. So, for 100, how much? So, 88,603 into 100 divided by 1,11,980, I get 79.12%. So, this is how you will have to calculate the solution for this kind of problems. So, we go to the next problem, that is problem 6. The share capital of Beta Ltd, which went into liquidation, consists of 1,000 preference shares of rupees 100 each, rupees 90 paid up. Then 800 A equity shares of rupees 100 each, rupees 20 paid up. See, this is 90 paid up. So, this is 80 paid up. Then this is 60 paid up. So, there are 3 categories of shares here. These are the preference shares and these 2 are the equity shares. Now, in equity shares also, here 20 rupees is unpaid. Here 40 rupees is unpaid. So, make a note of this. So, the preference shares had no priority right as to the repayment of capital. So, when they mention this kind of a statement in the problem, it means that preference shares are to be treated in par with the equity shareholders. So, they won't have any preferential right over the equity shareholders. The calls in advance received from A shareholders is 2,750. So, these A shareholders, there is a calls in advance. Now, what is this calls in advance? Calls in advance is the call money which has been received in advance. So, even though the company has not called the money, the shareholders themselves, they have voluntarily paid the money in advance. So, that is calls in advance. So, next, the various creditors were as follows. So, they are given us a list of the creditors here. The preferential creditors 15,200, fully secured creditors 67,000, then unsecured creditors, out of which 2,000 was waived by them. So unsecured creditors value is 43,000. Out of that, 2,000 which is waived. Waived means they said they are giving a discount. So they say that 2,000 you need not pay. So that is waived. Then liquidation expenses amounted to 10,216. The liquidator's remuneration was fixed at 4% on amount realized plus 2% on payments to unsecured creditors. So 4% on amount realized plus 2% on payments to unsecured creditors. Assets realized 2,20,000. Prepare liquidator's final statement of account. So we have to prepare the liquidator's final statement of account. So note 1, when there is calls in advance, it should be paid before returning the respective share capitals. So this is something which you have to remember when you are working out the problem here. So what is the calls in advance money you have received here? So the calls in advance is rupees 2,750 which you have received from the equity shareholders. So equity shareholders have paid the calls in advance. The calls in advance of preference shareholders should be paid before returning the preference share capital. So before returning the preference share capital, you have to just repay the calls in advance, and the calls in advance on equity shares should be paid after returning the preference share capital. So this is the order in which you have to return the calls in advance. So if there is calls in advance paid by the preference shareholders, first you just return the calls in advance, then pay the preference share capital. So if equity shareholders have paid calls in advance, you first return the share capital, so calls in advance of preference shareholders, then preference share capital, then you return the calls in advance of equity shareholders, and then you return the capital. So this is the order in which you will be returning the capital. Then there is one more note. If there are different categories of equity shares with different paid up value, the amount available should be distributed among all categories in such a way that the balance left unpaid should be equal to all categories. So suppose there are equity shareholders. So in this problem only we have two types of equity shareholders. They are A equity shareholders which have paid 80 rupees per share of rupees 100, and there are B equity shareholders which have paid only 60 rupees. So they have to pay a balance of 40 per share. So there are two types of equity shareholders here. Now we have to make the payment in such a way that the loss is equal for all the kind of equity shareholders. So in this problem especially, they have mentioned that preference shareholders don't have any preferential rights. So we are considering the preference shareholders as equity shareholders, and we are distributing whatever surplus is remaining among all the three categories of shareholders. Now preference shareholders have paid up to 90 rupees, then A equity shareholders they have paid up to 80 rupees, and B equity shareholders they have paid up to 60 rupees. Now we have to see that the loss is shared, whatever is shared, it will be equal among all the three types of shareholders. So when preference shareholders do not have preferential right, preference shares should be treated at par with the equity shares. So we have to treat them at par with the equity shares. Then we have the liquidator's final statement of account. So at cash at bank is nil, it is not given in the problem. Asset realized is already given 2,20,000. There are no surplus from creditors and there are no contributories. So whatever the other information, let us see here. So the unsecured creditors is 67,000. So that is the value of unsecured creditors. Then we have the legal charges which is nil. Then they have mentioned that 4% on asset realized is considered as liquidators remuneration. So what is the value of asset realized? 2,20,000. So 4% on 2,20,000 is 8,800. So next will be, they have also mentioned here, if you can see here, 4% on amount realized plus 2% on payment to unsecured creditors. But they have not made a mention of preferential creditors. If they have not mentioned preferential creditors also, we have to pay 2% on preferential creditors. So 2% on preferential creditors. So they have already given us the value of preferential creditors. If you can see here, preferential creditors is 15,200. So into this 2% we have to pay to the liquidator. So when I am calculating liquidator's remuneration, I have to write 2% on 15,200. So that comes up to 304. Then 2% on amount paid to unsecured creditors. So we'll see what we are paying to the unsecured creditors. So liquidation expenses is 10,216, debenture holders is nil, preferential creditors is 15,200. So next is unsecured creditors. So what is the value you are paying to the unsecured creditors? So unsecured creditors value is 43,000. Out of that 2,000 has been waived. So 41,000 remains. So this we are paying the entire amount. So when you are paying 41,000 to the unsecured creditor, so you will be charging 2% on 41,000. So that comes up to 820 rupees. So I have written 820 here. Then next is preference shareholders. So preference shareholders, so we have to just see what is the balance remaining, and then we'll come back to this liquidator statement here. So the calculation of distribution of surplus. So what is the distribution of surplus? So the net surplus available to all the shareholders. So since the preference shareholders don't have any preferential right, so I will consider it as an equity share, and I will be distributing the surplus equally among the various categories of shares. Now, what is the value of asset realized? 2,20,000. Before I come to this figure, I have to add all the payments I have made here. So 67,000 plus 8,800 plus 304 plus 820 plus 10,216 plus 15,200 plus 41,000 plus 41,000. So when I add all this, I will get to an amount. To that amount, I will add 2,750. So 2,750 is the calls in advance. So whatever calls in advance I have received, that also I will take it as a payment first. So when I add all that, I get this 1,46,090. So from the asset realized, I deduct 1,46,090. So the surplus amount which is available for distribution among shareholders is 73,910. Now, I have to add notional calls. Now, what is this notional calls? See, notional calls are calls which are made. So, we assume that the calls are made and the shareholder is paying back the money. So, in the end, we have to return the money to the shareholders. So, notional calls means, so you assume that the calls are being made and the money is received, and then you calculate what is the surplus to be distributed here. Now, in this problem, the preference shareholders, they have paid 90 rupees per share, and the A equity shareholders have paid 80 rupees per share, and B equity shareholders have paid only 60 rupees per share. Now, when this is the case, So we have to see that this A equity shareholders also, they are at par with the preference shareholders. So there is a difference of 10 rupees between the preference shareholder and the equity shareholder. So that 10 rupees, I assume that it is being collected from the equity shareholders. So on 800 A equity shares at the rupees 10 per share, it is 8,000 rupees. Then on 1000 B equity shares, so this 60, so 90 minus 60 comes up to 30 rupees. So on 1000 shares, if I am collecting 30 rupees, the total will be 30,000. So when I add all this, including the notional calls, I get a total of 1,11,910 rupees. So this amount I have to share among these three categories of shares. Now I'll write here, these are the preference shares, which is there are 1000 preference shares, and these are the A equity shares, that is 800. This is the B equity shares, which is 1000. So 1,11,910 I am dividing among 2,800 shares. So 1,11,910 divided by 2,800, it comes up to 39,968. So per share I am getting 39,968. So 39,968 into 1000, I get 39,968. 39.968 into 800, it comes up to 31,974, and again for 1000 shares I get the same amount. Now this is shares in total surplus. Then from this I deduct the notional calls. So what are the notional calls? On these 800 shares, 8,000 rupees I will deduct, and on these 1000 shares, 30,000, whatever the notional call I have assumed, I am deducting. So what is the amount payable to all the categories of shareholders? 39,968 I'll pay to the preference shareholders. Then from these shareholders, for this I'll pay 23,974, and for the B category I am paying only 9,968 rupees. So this is the amount of surplus which will be distributed to the various shareholders. Now I have to check whether the loss is shared equally between all the shareholders here. So the verification of net loss. So this is the preference shareholders, this is the A equity shareholders, this is the B equity shareholders. So what is the total paid up amount of the preference shares? 90 rupees. So of the A equity shares is 80 rupees, B equity shares it is 60 rupees. So the amount paid per share, so it is 39.97, here it is 29.97, 9.97. So how I got 29.97? You can see here. See, 23,974 divided by 800. So when you divide it by 800, you get this 29.97. So again here, if you can see here, 9,968 divided by 1000 rupees, I get 9.97 per share. So from the paid up value, I am deducting the surplus amount distributed. I get a balance of 50 rupees 3 paisa, 50 rupees 3 paisa, 50 rupees 3 paisa. So the loss has been equally shared among all the three categories of shareholders. So this is how you have to work out the problem. So the next, we have one more problem here. So this balance sheet of Miniature Limited as on 31/3/2015. So the share capital is 2 lakhs, equity shares 75,000, 3,000 equity shares. See, this is 75 paid up. This is 60 paid up. We have to make a note of that here. Then 14% debentures with floating charge 1 lakh. Interest outstanding 14,000. Creditors 1,45,000. Total 7,14,000. So buildings it is 1 lakh. Machinery 2,50,000. Patents 40,000. Stock 55,000. Debtors 1,10,000. Cash, profit and loss account and the total. Then on the next, the company went into liquidation on the above date. The preference dividend were in arrears for 2 years. The arrears are payable automatically on liquidation. The creditors include a loan of rupees 50,000 on mortgage of land and buildings. The assets were realized as follows. So there is a mortgage on the land and buildings for rupees 50,000. So that we have to take care of. So the land and building value 1,20,000. Plant and machinery 2 lakhs, patent, stock, debtors. So the assets were realized as follows. The expenses of liquidation 10,900. The liquidator is entitled to a commission of 3% on all assets except cash and a commission of 2% on amount distributed among the unsecured creditors. Preferential creditors amount to 15,000. Assume the payment was made on 30th September. Prepare liquidator's final statement. So whenever they mention the date, it means that debenture interest has to be paid up to this date. So we have the liquidator's final statement of account. So whatever is the balance sheet value that we will mention here, then asset realized, land and buildings, plant and machinery, patents, stock, debtors. So the total assets comes up to 4,90,000. Now in this side, we have the secured assets. So the buildings out of that partly secured it is 50,000. So I'll mention it here. Liquidators remuneration 3% on 4,90,000. So on the asset realized, I am calculating 3%. So that comes up to 14,700. Then 2% on amount paid to unsecured creditors. So liquidation expenses 10,900. Debenture holders, the value of debentures is 1 lakh. So interest is 14,000 outstanding. So for the next 6 months, the interest is 7,000. So the total amount payable to the debenture holders is 1,21,000. So the preferential creditors is 15,000. Next, unsecured creditors is 80,000. So out of the total, if you can see here, 2% on amount paid to unsecured creditors, and creditors include a loan for rupees 50,000 on the land and mortgage. So unsecured creditors is value is 80,000. So after making all the payments, so whatever is remaining we make to the preference shareholders. The share capital is 2 lakhs, arrears of dividend. So if you have to calculate the dividend, can you see here? See, what is the preference share capital? 14% on 2 lakhs. So 14% on 2 lakhs. So that will be how much? 14% into 2 lakhs. So that will be 28,000. So this is dividend for 1 year. So they have told arrears of dividend for 2 years. So for 2 years will be 28,000 into 2. That comes up to 56,000. So total payment is 2,56,000 for the preference shareholders. Then for the equity shareholders, whatever is remaining you pay. So only the amount remaining is 16,000. So I'll come to this. So before that, we calculate the liquidator's remuneration. So this is the total of amount realized. 4,90,000 into 3% is 14,700. 2% on amount paid to unsecured creditors. So it is, so 15,000 are preferential, 80,000 are unsecured. So totally it is 95,000 into 2%. So that comes up to 1,900. So next one will be Distribution of surplus. How you are distributing the surplus? So 5,65,500 minus 5,49,500. You are getting this 16,000. How I got this? You add all the payment side, whatever the payment are there. So you will get this amount. Then from that you deduct, you get 16,000. To this you add the notional cost. On 3,000 equity shares at rupees 15 per share, it comes up to 45,000. So the total surplus is 61,000. So we had two categories of shares here. One is 1,000 equity shares and then another 3,000 equity shares. So the shares in total surplus. So it will be 45,000, 15,250 and 45,750. So notional call is nil here. From them, I have to make a call of 45,000. So the amount payable will be so much. So verification of net loss. So here the paid up amount is 75 rupees and there the payment amount is 60 rupees. So amount paid per share is 15 rupees 25 paisa. So here it is only 25 paisa. So the balance 59 rupees 75 paisa. That is the net loss per share. So the net loss we have calculated as 59 rupees 75 paisa. So coming back to this, so you are paying a total of 16,000 to the equity shareholders. So they will be having a equal loss. All of them will be bearing an equal loss of 59 rupees 75 paisa. So then we have the total. So in this way, we are calculating the solution. I hope you have all understood this session. Thank you.